Hello and welcome back to Roguefx. Today we are going over take profits and stop losses. This is going to be 2.0 of the Roguefx original course. Of course, I like to add something a little bit more technically advanced, something new, something to overall reiterate the simplicity of how we approach the markets, right? Today we are not necessarily going to be talking about stop losses and take profits, rather internal to external range liquidity. What makes internal range and external range liquidity so important is that, it's the market cycles. It's how the markets move. There's no internal range liquidity without external range liquidity. There's no rating external range liquidity without internal range liquidity being met. It's a never-ending cycle of, the overall fractal nature of the market. The markets do not and will not move without a so-called pattern, right? This pattern is going to be universal. This pattern is deemed a QM or Quasimodo. And when you understand how these patterns print or come to be, you can then understand how order flow, liquidity itself, rather inducements, the range aspect of it, as well as structure all come together as of a beautiful picture or a nice portrait. If you haven't already, hit that like button, subscribe to the channel, because we do aim to post consistently, and it only means that you get our latest content. I do have a membership waiting room down in the link in the description below. I urge you to take advantage as soon as possible, because again, when enrollment closes, I'm going to focus on those specific individuals. And if you are not one of those individuals, I don't know what to tell you. Of course, for the basic membership, I will be offering one-on-ones, which of course will be paid for, because of course nothing is free in this life. However, that's as much as all I can get. That's to an extent, that's all I can give or offer. I am really going to be focused on those who are obviously committed to their trading journeys and are definitely serious about finally mastering this craft. I will not keep you in some kind of loop. Understand that I am here for your highest good and my intentions are very pure. However, I will not spoon feed a soul. You have to want this. I'm not going to call you and make sure you're up to get on our calls, or force you to, be accountable. That's not my job. My job is to guide you. I can guide definitely a horse to a pond to drink, but I can't necessarily enforce. And I really do feel like it's a waste of my energy to a certain extent. If you do not want to invest in yourself, invest in your future, invest in your life, in your family, I will not make the effort to obviously keep you around, because of course you can't necessarily take yourself seriously, so why would I? If you haven't already, definitely ring that post notification bell to stay updated on all our videos. Membership plans will definitely be dropping mid-December, sometime around there, as well as the cost to obviously the two different payment plans, which happen to be basic as well as rogue. Without further ado, let's get this video started. As you can see, I have already marked up the ranges. What I'm going to do is pretty much guide you through this market structure and help you understand the overall fractal nature of these markets. I will really be only pointing out the different, types of liquidity as far as external and internal range, so you can understand how these markets move. Not necessarily real time, but with it, like, it'll be something that's like in front of you and something that you can definitely watch again and study, so you can understand how to spot these QMs, how to spot internal range and external range liquidity, how to spot guaranteed take profits, as well as, that extension, right? So as you can see, price started with an established strong high. We didn't necessarily take out liquidity to the left. However, a mitigation is very much sufficeful. We ended up creating a choke, retesting, taking out internal range liquidity to the left. This choke is obviously confirmed by our overall fib. Even if it's with a wick, understand that it definitely still counts as a, not necessarily break of structure, but definitely a choke, right? Price establishes our internal range liquidity and raids it. We have a decent example of a bit of a ping pong action, right? Because when we obviously long this, I guess you could say unmitigated wick mitigation, we can definitely take profits at the internal range liquidity towards the left and then continue lower, continue the overall bearish trend, right? What I really want you to understand about obviously taking external range liquidity profits is how important it is to look out for partials, right? Partials being obvious take profits for an overall security of at least I want to say at least for me 80 to 75, maybe even no, yeah, 70 to 80, maybe even 85% of your initial position, right? At that point, I don't understand, or not necessarily understand. I don't really think it really matters where it goes because you've secured majority of your profits. You can go on, live your life, and feel how you want about what obviously the uncertainty that is definite in the markets. So as you can see, price rates internal range liquidity giving you our bullish as well as external range liquidity bearish bias. Price finds any kind of demand zone towards the left. We end up creating a weak low. What does this mean? Well, price took out liquidity to the left right here. So what does this mean for this protected high? That means that this protected high is going to be our next protected high. So what is price going to initially aim for as, meeting this demand zone or demand area? Price is going to reach for what? Internal range liquidity, which happens to be what? Well, if you look closely, we have a slanted high. We stretch that out. What do we have? We have a pretty decent wick entry, right? To a certain extent, right? Let me see. Yeah. It would be pretty smooth for real. As well as we can definitely use this I guess rejection block that is bullish as an inducement, and then at that point I'm pretty sure it for sure. I'm pretty sure it just wicks it, raids it, provides a liquidity grab, and continues lower to what? External range liquidity, right? Now, majority of the times, price is not necessarily just going to fall down or pretty much, in an extent, fall down to hell, right? You want to use that figure of speech, right? A lot of times, price is going to fake and obviously take out those positions or those traders that are actually chasing price on the way down. So I know what you're thinking. What does that mean for traders who are entering upon this high, and this high? You can definitely enter within these strong highs or protected highs that are, obviously protected for the meantime. However, this is why it's so important to look for your internal range, or not necessarily internal range, but your partials, right? Your partials liquidity, right? So in this extent, we have a slanted low, and then we can stretch that out. We have a partials target, right? So even if price decides to take a reversal and obviously take out internal range liquidity to the left, which is very much apparent, right? Understand that we can definitely prepare for that, right? We can definitely see, not necessarily through the market, but we can see ahead of time and expect some type of reversal. Why? Because yes, we definitely do have liquidity down here. We definitely do have an extent, or to an extent, we have a trend line. However, to the left, we definitely have a sort of price rebalancing that, just took place and happened to react. And it just makes sense. It just logically makes sense, and it's possible. So price did it. Now, that doesn't mean that this isn't a weak high. This isn't, obviously guaranteed liquidity or guaranteed low that's obviously going to get taken out. Because, obviously, price definitely did go ahead and take this low out. However, what you need to understand is a lot of the times price is going to fake for the simple reason that, it needs to reach for a type of liquidity before even going anywhere, right? So at this point, if you're right here trying to figure out why price isn't necessarily going in your favor, understand that there's liquidity up here. Have you checked if there's a trend line, maybe an inducement? Have you checked the last up move before the down move, which happened to be what? A bullish rejection block. It's a demand area. Or I'm sorry, it is a supply area, supply zone. It's valid. It can happen. So it did happen. Price obviously liquidated liquidity towards the left. We have a choke as well as a break of structure continuing towards the lows, and overall meeting this weak low, in general, right? And at that point, price continues to its next obstacle, which happens to be the weak low before that. What makes this low weak? Did it take out this low? No. Now, what makes this low weak? Did this low take out the low before that? Okay, it doesn't necessarily show, but understand it did not. And why? What's our confirmation? Our confirmation is simply the market continuing a bullish impulse down. It's that simple. It's not necessarily science, or I guess you could say rocket science, right? So as price takes out internal range liquidity, reaches for external range liquidity, understand that price still needs to obviously perform its overall price movements, take out internal range liquidity, break structure, and at least retest, right? It may not have to or be able to take out internal range liquidity towards, the left or obviously perform a liquidity grab. However, understand that towards the left, there is definitely a price rebalancing. So to an extent, it doesn't necessarily have to, because we already broke structure, and the liquidity grab just happened to be what? Well, if I draw my fib, we definitely have a fair value gap, right? So to an extent, yes, it did perform a liquidity grab as well as a retest and continue lower, establishing our what? Strong high, weak low. Price reaches for external range liquidity, performs a weak low, rallies a bit higher, taking out what? Internal range liquidity, which happens to be this three candle formation. It's just that simple, right? Many smart money are still looking at this, I guess you could say, these unmitigated wicks as more of a supply zone, which is fine. However, if liquidity is right here, why would you be looking anywhere else for any kind of retracement zone or retracement area? Price is not up there, price is right here, right? So we understand, or we can understand, that when price misses you or near misses, however you want to call it, it's simply doing what it's programmed to do. So yes, after taking out internal range liquidity, we have a very much guaranteed profit of what? Dang near 160 pips, obviously towards where? This weak low. After taking out external range liquidity, what's the next phase in the range cycle? Well, obviously internal range liquidity. So what is price going to do? Price is going to retest, form a type of liquidity, and obviously take that liquidity out. And in this case, what did price do? Price performed a price rebalancing. These rebalances are strictly market structure balancing itself out. It's not so complicated or as complicated as other people make you think. This is what's happening in the markets. I'm just explaining it to you. Why? Because a lot of people like to put these weird labels and weirdness all over, social media and say this is how you trade, but it's not necessarily doing much for you as an individual. How do I know that? Because you're in this video right now, right? Correct? So upon taking out this weak low, right, securing our partials, our 85 to 75% of our overall position, price, obviously continues lower with an extension, retest, provides internal range liquidity, rebalances price, continues lower. We take a partials of 100 pips, right? And again, I'm not going to explain the overall time frame that we are in. Just understand that these are how the markets move, right? You can go on the 1 minute and this be not necessarily a 100 pip move, but a 10 pip move, but it's the same. You can still make a percentage out of that. As we continue, price creates or establishes our strong high, weak low, right? How do I know? Because obviously, if I draw my trend line, we definitely have a break. However, we didn't necessarily break above to where it was like a major issue or a major break, right? Instead, what did we have? We had a mitigation of an unmitigated wick. How is this valid? The internal range or the inducement below there. In this case, we have a guaranteed profit of maybe 150 pips, as well as a bit of an extension, taking out this slanted low, and then obviously, retesting or reversing in order to do what? Well, if we look left upon the range before, of course, we have a bit of a trend line. We stretch that out. What does it give us? It gives us our internal range liquidity. We have a target. You can definitely take this long. You can take this long, or price rebalancing. You can obviously take this gap and then continue higher to where you already have your target, right? What is it going to be? Internal range liquidity. So we have our external range liquidity to internal range liquidity to where you probably guessed it. Definitely external range liquidity. We definitely have our partials to take profit. Price establishes our liquidity grab break of structure, which is obviously a QM. At this point, you have all right to sell all the way down to this partials. Yes, it can hold, but in this case, it definitely didn't, right? So as we're, selling towards these partials take profit, we ended up taking out internal range liquidity, which happened to be what? Unmitigated wick, continue lower, provides an overall break of structure. And maybe on the lower time frame, we obviously are provided with an unmitigated bearish rejection block. We have an indecision or a pin bar that's very much bullish, and as well as it looks like a doji. However, I believe that is a bearish rejection block reaching for internal range liquidity, being what our bit of a bullish indecisive candle. You can definitely target this weak low, so I guess you could say guaranteed profits, which can be as little as 50 pips is what I'm saying, right? So that's literally like saying you're trading on the 5 minute, right? To an extent, you're trading on the 5 minute, securing 50 pips partial and then letting the rest run to who knows how big these ranges are going to end up being. However, when you understand your trading ranges in general, you can definitely say, okay, well, where's our next high being formed? Well, price is definitely taking out liquidity. That's a strong high. At that point, price performed a break of structure that confirms that strong high, right? So obviously, when we end up, breaking structure, maybe a choke as well as break of structure, we can obviously say, okay, what's our next move? When we need a retest, price retest, we need liquidity. Okay, so we don't have liquidity anywhere here. Okay, that's fine. However, I do peep a slanted high. It looks like liquidity to me. That's a decent entry for an overall. I mean, honestly, for real, you can have a guaranteed partial of 129 pips. And obviously, I mean, the sky's the limit with Forex. And that's why people are gravitated to this industry. However, if you don't know how to trade Forex, how do you take advantage of the industry, at least in a profitable manner, right? Price continues lower, continues its overall trend that's very much bearish, which is fine. At this point, we have a bit of an extension. However, we are provided with a choke as well as a break of structure. Price obviously reaches for external range liquidity towards the left. As we obviously establish our overall bullish range, you can see definitely that price obviously left a footprint in an inducement, right? So that's a weak low. We retest, target that weak low, which happened to be what? Liquidity, right? So whether that be slanted lows, whether that be unmitigated wick, whether that be price rebalancing, it's just what it is, right? So at this point, you can definitely target our weak high, right? Did this high break this high above here? No, it's weak. It's a partials take profit, which is amazing, right? Because imagine pulling 30, 33, 333 pips. Imagine what that can do for, your one trading account on that one trade. Or maybe you decided to scale. It really just depends, of course, upon your knowledge as well as your experience. So yes, price, obviously took out internal range liquidity, reached for external range liquidity. It actually failed, right? So say price fails. At that point, what does that kind of insinuate? Well, what does price do? Price takes out a low. We obviously reach for a type of liquidity, which happens to be this structural low in the lower time frame. We can actually even mark out a price rebalancing, as well as understand that to an extent, price provided a weak low. It might have been on the 1 minute. It might have even been on the seconds. But did this low take out this low? No. So that's a weak low. Price took it out, performed a liquidity grab. That is a direct entry for anyone willing to take that risk. And where do we target? We target external range liquidity. Being obviously we caught the start of a range. However, if you're willing to wait, if you're willing to be patient, we take out where, or we are gravitated to where? External range liquidity being where? This I guess you could say structural high. After we take out external range liquidity, where is our overall, in a sense, internal range liquidity, right? Well, if we look left, price definitely left what? And 3 counter formation. So we already know selling from all the way up here where our partials take profit, or quote unquote guaranteed take profit is, right? So price performs a liquidity grab, break of structure. At this point, we have a choke as well as a break of structure. What's the only thing left to do? Retest. At that point, reach for where? Internal range liquidity. If you look closely, price definitely gives us a price rebalancing. It's just that simple. Whether you took this strong high or whether you took this confirmation, understand that you can definitely hold to this weak low, and understand that you would definitely be paid. Understand that, and honestly, if you develop your skills to a greater degree, you can definitely understand why people are so set on the term compound interest. Because when you understand how the markets move, you can definitely understand at that point why it's so, I don't want to say easy, but it's so predictable to obviously spot manipulation and take advantage of the overall impulses within price. Price takes out internal range liquidity. What's next? Well, we took out internal range liquidity, so what's the next cycle within, obviously the range cycle? External range liquidity, right? And what's external range liquidity? Well, what do we have above here? We have a weak high. Did this high take out this high? No. So it's weak. Okay, cool. And really, if you really want to use your imagination, we have a what? Slanted high, right? So we have an overall take profit of about, it's a decent amount of moves, right? So obviously price performs our choke. We provide a footprint or inducement in internal range liquidity and in taking out internal range liquidity, right? Because we have a slanted low, as well as, continuing to wear external range liquidity within this range, right? This is still internal range liquidity, yes. However, within this individual range, it's going to take out external range liquidity in order to take out internal range liquidity, which happens to be what? If it's not this inducement, it's definitely this slanted low, which stretches out to where? A really smooth sniper entry. Very much nice. At this point, price has all right to continue towards the highs. To where? Our week high, right? So we definitely have a guaranteed profit of 400, well over 400 pips, but in an extent like external range liquidity. At this point, external range liquidity has been taken. Our strong high has been established. We are provided with a choke as well as a break. All we need right now, or at this point, is a retest taking out what? Internal range liquidity, right? So internal range liquidity being, this unmitigated wick looks pretty nice. At that point, price performs yet another QM, continues lower to where? Well, if you look left, we definitely have a three candle formation as well as a slanted lows, as well as a pretty obvious, right? And I'm not gonna say obvious, but definitely obvious rejection block, right? And when we have that, we can definitely find discount pricing, which would lead to an overall partial of what? Well, we have above, or I guess you could say the range before it, we have a trend line, which stretches out to a pretty decent, like honestly for the higher time frame, a pretty decent external range liquidity or partials take profit. You can take your partials right here, while to an extent accumulating positions. Well, even if you say you lost this position right here, right? Price obviously reversed. Understand that that's a sacrifice to the market. You have to lose in order to gain within this industry. And honestly, at this point, any industry, right? You think about a rap career, you need to sacrifice your quote unquote image. You need to sacrifice your quote unquote any kind of money to obviously bring in revenue to a certain extent. Or think of it like if you're going to be a cook, you need to buy those ingredients for your overall processes and obviously your career, right? So that's going to be a hit. That's going to be an extent. It's going to be a loss. However, you understand, obviously the processes you go through in order to obviously come out on top or come out profitable within any pretty much industry, right? And that's just understanding risk management, and that's understanding how to manage losses, how to manage your emotions, how to manage the overall uncertainty of life, right? Price continues. We end up breaking this overall range, would be obviously partials. So price at that point enters a bit of a consolidative phase. We ended up manipulating out of it. As you can see in this case, price obviously establishing our strong low, right? Strong low, which would insinuate a liquidity grab break of structure. That would be our protected low. As you can see, price did not break this low. Price held, used this, unmitigated wick as a huge demand zone on the lower time frame, of course. Price took out internal range liquidity and continued higher to where? External range liquidity, or to an extent, if we obviously, if we stretch this out and understand price in a bit of a smart money point of view, price obviously established a weak high. What makes this high weak? Did it take out this high? No, it did not. So that high is weak. Okay, that ends up being our partials take profit. We have a partials take profit of what? Reaching towards, yes, external range liquidity of this range, of this particular range on, I want to say, the intraday. However, internal range liquidity is if we're talking about this overall impulse towards the lows. In this case, we're definitely taking out an inducement towards the left, which would be obviously internal range liquidity. Whether it does that now or it does that in the near future, understand that we definitely have a guaranteed partials to begin with. So we shouldn't necessarily be worried on the outcome of any one specific trade, because the uncertainty in these markets make it so you can literally win on accident. It's weird, but when you understand that, at that point you can understand or comprehend the overall relationship you can develop with these markets, right? Because I mean, probabilities don't necessarily guarantee the worst possible outcome, is what I'm trying to help you kind of comprehend. If anything, the odds are in your favor, especially when you know what you're doing, right? You have the knowledge, right? So we obviously continue towards internal risk liquidity. So yes, take your partials, take your 75, 85%, let your 15 to 20%, go, and take that as a bonus pay just for being patient or just for being willing. I really hope this video made sense to a lot of you. I didn't want to take up too much of your time. I feel like these or this course or Roguefx 2.0 combined with Roguefx 1.0 would do a lot of people's trading plans very much justice. If you are still having a bit of confusion, especially when it comes to this topic, leave it down in the comments below. I would definitely get to them. If you have any other questions or you want me to go into anything else, any more in depth, be sure to, of course, leave that in the comments below as well. I will definitely get on it as soon as I can. Before you do go ahead and head out, I would appreciate it if you hit that subscribe button, like this video, and obviously turn on that post notification bell because it definitely is free and it only means that you can stay updated on all our videos. This is probably the simplest, this is definitely the simplest approach that you can have when it comes to Forex trading. If you are willing to make that investment, join the waiting room down in the description below. If you do need an updated link, let me know and I would definitely provide that with you as soon as possible. For a lot of people, they're going to see profitability in these markets through this channel, through this really these videos individually as well as together through my membership. Understand that the time is now. Like, the time is now. Plan. This is not me. This is simply me answering my calling upon this world. All glory to God. This is this is not me. I can do so much, but it's God who provides me this energy, and I don't plan on taking advantage or taking it for granted at all. So I'm here to help. If you obviously desire this help, then you will make the necessary moves to obviously put yourself in a position to be helped. I do appreciate all of you for tuning in. Until next time on Jody Effect, y'all have a wonderful night.